This is a review of the market action on the 8th of February for trading on the next day, Thursday, the 9th of February, 2012. Starting with Broadcom. Broadcom has been bouncing between essentially 37, this level right here, and 38. It had been constrained there after having had a really nice big candle, single day movement upward off a gap and go beginning of the day. And above 37, talked about yesterday how these two tails below 37, this opportunity to fall below 37, which was essentially rejected, and the decision to continue up and have a green body candle closing higher than the previous day above 37 indicated the potential for more upside. Saw that today. Broadcom did that pretty fast and quite early. We'll go and look at it over here on the 1 minute today. We saw that it took off from the open very quickly. In the first 5 minutes, it was already up all the way up here to 37.71. It did have to fall back, however. Came back down to 37.45 and actually all the way down to 42. Had to touch its low extreme range in the very first candle. It basically came down for a touch and then just carried on upward. If you're thinking upside for this based upon the initial strong 5 minutes and like the fact that, well, it didn't even have to come down here to prior support, the close, or didn't have to close the gap and didn't have to come down to these tops here, one of the things you could have paid attention to was the fact that it came from a horizontal lower level, touched it again and began to go again and maintained itself. If you were to look at this here and see how it would take this opportunity to fail, it's making a decision here, starts to rise above this, is touching off of this line, breaking it, and then going to new highs. Any number of these things moving to new highs and staying there for several minutes, you could conclude that it's really strong, and maybe you do want to take it up, maybe make that decision even as late as here, maybe even a little bit higher. One of the things you could do with that is just note the relative strength and the fact that when gaps do close, they can do any number of things, but if they don't need to close, that shows strength in the direction of the gap, and there you go. There's your decision. So that was Broadcom. What I have to say about it is, having given it back and then maintained a flat presence the rest of the day when the market just continued up, well, that is relative weakness. You could see tomorrow, however, that very possibly could come up to test this. Depending on the market. The market is extremely strong. If the market is still strong tomorrow and is favorable for up, like it shows here today, brand new 11-year highs, 4 green days in a row having gapped to new highs. That's a substantial amount of strength. Once again, another tail today, rejecting the opportunity to fall and break this uptrend line that we've had in January here on the market. So rejecting that and basically coming off of this trend line, which was established by the early January action. It's had several opportunities to fall below this line, each one resulting in a movement right back above it. And we're now at a gap and go higher, 4 green candles and 2 tails right off of this line. So we're solidly living above this line again. And it's not a real wide ascending channel, so paying attention to this top level of this channel would be very important. But as you can see, plenty of room for another big up day tomorrow, especially early. If the opening is favorable, maybe Broadcom decides, okay, yeah, I'm perfectly fine living up here, and I'm going to try again. Goes up for 30 and goes up to test these highs again. Still potential for upside for Broadcom tomorrow. However, it was in the afternoon much weaker than the market overall. So have to just pay attention to that. This could be some topping ability. Maybe it doesn't want to be up here, maybe it needs to break. And all depending upon the open, you probably tell a lot from that. Opening at 37.50, opening essentially anywhere lower than the close today would probably be problematic for Broadcom early tomorrow. So just take a look at that. Today's close is a key level for Broadcom tomorrow with that kind of pattern. NVIDIA very strong above 16, broke above it and didn't look until later in the day. Take a look at NVIDIA real quick. It came back with the market, but stayed strong throughout the day, and didn't retrace and see the same lower levels, a little stronger than Broadcom in that respect. But above 16, as you can see, just really went very nice. So tomorrow could be more of the same. Maybe it needs to go even higher. This elbow here back on the daily, some of these levels here could serve as head resistance. This really right here at 17 appears to be a place where it tried to recover and then broke below and went down. I'd call that a significant price level here at 17 for NVIDIA. This is a very nice candle in furtherance of this uptrend that began back here on the break above 15. Maybe this is strong enough to go ahead and try 17. It could be. So you can keep an eye on that. SanDisk. SanDisk had a line that had to stay above in this attempt to reject the gap down and fall, which it was hanging with pretty well for several days. It fell yesterday, having violated that early. It fell immediately and strongly from the very beginning of the day. Today, however, it did catch some wind or catch some support, let's say, around 46 and topped out at 47. So we can see that we're in a channeling behavior right now. SanDisk is not willing to make a determination as to what it ultimately wants to do, at least not yet. What I have to say about this is 47 clearly is going to be a key level going into tomorrow. You can evaluate the open based upon that. Pull up in here this 3-day chart, and you can see the uptrend that we maintained and where we are with that. A little bounce off this extreme low here on this pullback to maintain this uptrend. Some other uptrends we have through here, you can see some of them have been broken. Here's a topping uptrend that it just couldn't stay above 47 3 times to try above there. Couldn't do it. But also, I would say these tops here from yesterday's midday action on the attempted recovery would also be important. A break back below this into this region would negate all of this in the afternoon of staying above that region. So how far could it fall? What lows would it test if we're not able to maintain essentially 46.70 or slightly below that, 46.68? If it could not maintain that, how far could it come down, and would that be confirmation of the gap and fall? Because the retracement today was not as big as the fall yesterday, and you can see the action looks to be saying, okay, well, maybe I really do need to be below this line. It could come up above 47, test again, test these highs here. If it were to be blasting past here, this is a pretty strong day. If it has a second candle, you'd have resistance right up here at 47.58, 47.60. If it were to go past that, you'd, I think, see 48 and more of these MAs, and would go into this gap region, try to close this gap here. Could do that in a single day. Depends on how strong the market is tomorrow and what the open for SanDisk would be. Other than that, looking at downside, I would say with violation of the uptrend it had today. Definitely have to pick that uptrend and play the early morning in reference to that and the tops and the psychologically important 47 level that you would see here in this chart. These lines here will be very important tomorrow morning. It's open relative to its close. So that's how you have to pay attention to SanDisk there. Other price levels here, it's clearly looking like it is paying very close attention to horizontal price support level, whether it breaks above it, whether it can maintain it, maintain its presence at it or not. In addition to these lines, horizontal price support is very important to SanDisk right now after such a big fall. X had a very big candle down today, quite sizable given this range recently. Not bad at all to the downside. It was very messy to begin with though, but you can see on this daily chart it began above 32, once again critical level 32 we've talked about, above which there is no resistance at all to a really nice move if it can stay up there. You can see up here 36, might be a reasonable place to expect a serious pullback. This is quite a strong cradle. This negates a bunch of the enthusiasm which is seen in this movement here, however. So that being said, the downside is predicted for the future, the near-term future. 31 would be an important level too, as you can see here just visually on some of this action in the back here. If it were to get above 32, let's say, in the next couple weeks, it could definitely go. But this is not a good call at all today for X. And if we take a look at its market action, you can see very weak relative to the market itself. Crashed, market crashed, and didn't recover at all in comparison to the market. In fact, just kept going on, sliding down. Had a couple attempts, each attempt rejected. And as you can see, going into tomorrow, what you'll be working off of is an attempt to go higher. Here we go. Attempt to get above this level that fails, and then have a peak at a lower level. So going into tomorrow, you have this important downtrend, which should carry it right below 31 tomorrow. So if it can't get above this downtrend and is staying below this important level of 31 and just really struggling, chances are good for a tip over. And then you definitely have to pay attention to this essentially double hit on this level here at about 30.80. That would be a very important level. If it starts going below that for additional downside, try to come back down perhaps to the 20. I could definitely see tomorrow, if it's particularly strong, if the market's not willing to continue blasting up to help X out, you could have another sizable candle down here, come down, hit the 20 with no real problem at all. A nice full dollar fall without any real trouble. Have to depend on how open though. The way you would have to pay attention to X this morning, it was quite messy. Did not take any trades to the downside with X, unfortunately. But think about it. This have to really look at this. X topping out and for 2 days being rather weak, doing nothing with this day, starting to go high here and giving it all back this day, and basically remaining at a level lower than all of the prior day's action. You can see here, this is trying to recover, trying to go up, and it just can't do it. X right here, there's the top there, and all of yesterday's action after the fall basically remains below this level. So just doesn't want to be up here. Starts the day back in that territory, immediately falls, and is having real issues, once again, getting up here. So we've got this line, it just refuses to go, go above. It can't stay above the price level of 31.90. And then you also have the parallel channel here. You can see that it falls below, and once it's going past this level, that's really problematic. You could have called this earlier, however, with this fact that, as you can see, it's just you're starting to get lower highs each time. These wicks are going down. It's tracing, every single time it tries to get up there. So if you're going through some of these wicks here and saying, okay, if it's really not even going to maintain this portion here, this uptrend here to try to get back above here, it could crack and fall, and that's exactly what it did. This movement here through this tail, the very end of the last day, and then once again, the close of the prior day is often very important. So you see what we've got here. We have a crack and fall below that close, comes back up briefly, peels over at the MAs, cannot maintain it once again. And this was its last chance really to do something to the upside before taking a plunge. You can think of it in those terms, and if you're just looking at the daily candle pattern, what you have here is clearly the critical level of 32 and the interaction with it. And what you have is you start above it, and you just immediately fall below 32. And for the third day in a row, it can't maintain 32 after closing above 32. Closes above 32, first time in forever and a day. 3 days in a row, can't stay above 32. Okay, third time's a charm type of concept. I'm really going to go this time. I just really don't want to be above 32. You could have just conceived of the entire day that way relatively early, and especially when in making that candle, let's go back to it, it starts to fall below the close of the prior day right there at 32. You could have made some decisions about that and saying, you know what, this really is weak enough that it could really just go. Starting high above 32, third day in a row can't maintain 32, falls below the close of the prior day. Okay, yeah, I'm going, and it just did. But that would be the way to analyze X. If you see all this messiness, you really can't find anything in there. You can skip to the daily pattern and just really play out the scenario in your mind as to what would be the expectation for X, having given us this and closed at new highs for, what is that, 6 months. New 6 months highs, can't maintain it third day in a row, gapping up, starting to fall, right back below a critical level. Okay, that's a lot of momentum, just can't do it. Expectation for this is to be higher on a new high like that, to at least be maintaining, can't do it. Very disappointing. All the people who are disappointed, guess what? They want to give up on it, and it plunges. Anyway, enough of X. FedEx. FedEx maintaining above 94 and is still in a strong uptrend. Today's candle was not particularly encouraging, but as you can see with FedEx, it is still in a very strong uptrend and does still have the potential to try to come to these other several dollars higher, especially if the market is favorable for that. No real reason for it to expect a real fall right from this level of about 95. Could happen, but certainly could continue higher for several dollars. McDonald's was good, moving back above 100 yesterday. Kind of gave it back today, 101 and down, and to close right at 100. So clearly still messing around 100, trying to figure out whether it justifies being above that price level. Once again, McDonald's is still at historic highs, or at least 10-year highs. Very nice run. You are seeing some topping action, however, from it. When this breaks and breaks this uptrend line, that's not the one. We have broken this accelerated uptrend line on earnings. Earnings broke that, and we're coming off this moving average here, this 50 on the 10-year. But this is definitely topping action, and so you might definitely consider that the run for McDonald's is coming to an end. Let's say if it is able to test this high and not maintain it once again, downside for McDonald's. Currently, if this stays below this trend line, you now have a downtrend off a broken uptrend. So this topping line pattern here could be coming on back down below 100, fall below 100. Who knows how far it could retrace. Best Buy had a third nice day upward after these two. This big candle coming out of nowhere. We talked about yesterday how big candle coming out of nowhere, kind of unexpectedly, especially when that reverses, some prior action in its direction. This reverse was very strong. See how it closed higher for the 5 days, going back into the gap region. Kind of just came out of nowhere. That often followed the next day by another big candle doing basically exactly the same thing. It's exactly what we got from Best Buy. This reversal upward on this day, here on the 20-day, 10-minute, 20-day chart. This reversal up for the day. And the next morning, it did the same thing throughout the day. Very fuzzy, messed up action today. However, it was strong early. It is likely topping out after that, given what it did and broke down from 25.50 again. 25.50 would be a key level for this. Does it really want to live up here with these extended peaks? Perhaps, perhaps not. But you have some discouraging action currently on Best Buy in terms of going higher after this big reversal. It has closed the gap. In fact, this close here is basically right where it closed today at 25.40. So it's closed the gap, not continue to go beyond the gap closure. So does it retrace once more? That's the question. Does it come on back down into some of these levels, back into the gap a bit before going higher? Have to take a look and see how it opens and how it behaves early. But Best Buy may have made a run that it can't sustain for the near term, may have come back down a bit before higher later. However, if it does maintain with the market and stay above this level, you can see visually this is an important area right in here. It kind of began the fall, 25.50. If it starts maintaining above 25.50 for more than a wick on a daily basis, it could very well just start shooting up once again, come up here to close the real gap, this one over here, this small gap here, this big gap. If it wants to get back up to 28, it will maintain itself above this level 2540, 2550 for a couple days, and then make a run past these highs, past 26, and then get going. It could very well do that in the next week or so. See what else we want to talk about. Let's talk about GM. GM had this little candy cane movement where it did cradle, but it weakened and fell and rolled over. Kind of looks like a candy cane here. And you get this quick movement down from a softening rollover and then just breaks down. Often this little tracement here, which will end up about the proportions of a candy cane, will often pop back up. And this was kind of messy in getting there, but on one day last week, GM did more with the morning than anything else, because this is generally, okay, I'm going to go higher. I'm going to come back real quick and then find a way to go higher. And seen any number of ways for it to do this. The general play is just, you see this, it's going to be higher. And this is how it decided to do it. It took a gap and just ran up. Did more with that morning than anything else that day. But it is softening, coming back down below this level. So GM is dithering. GM is not sure what it wants to do. This has been very strong movement up. But as you can see on a longer term chart, let's go back since GM was governmentalized, shall we say. It's only got, I don't know, a month's chart. Trading here, we had a nice run from these levels down here, a double touch at this level, and we are ascending through this hitch area, through that top to that top. How much do we need to pull back before we go higher? Are we going to break right through that? It's unlikely. This is where we closed today, horizontal here. So, more pullback may very well be likely. This was quite a run, and if the market is going to top, GM's going to go down with it. Let's see, Netflix. Netflix broke this enthusiastic uptrend reaction that it had. Its first opportunity in a while to go below. So it went barely below this uptrend that you can see drawn here. Went above it and continued up for a couple of days. Opened below it, refused to go down, and then went up dramatically 2 days ago. Went up again the following morning, but couldn't maintain above 130. Fell back below, and today it opened below that line and had a small attempt to go up, but closed down with, so we have a red break candle below a critical uptrend line for Netflix. This could very well fall in a big way tomorrow, especially if the market is not favorable upside. This is really, really vulnerable pattern for Netflix. I don't know when it could do it. It could do it very quickly. Could do it with a gap down that reverses if the gap's too far. Any number of things tomorrow for Netflix, but this is not a good candle for Netflix. Continued upside above 130. We may very well have to bounce around between it and the MAs to decide what Netflix wants to do farther down the road. This uptrend from the opening after earnings this morning is finished, and so we have to see what it wants to do with that. It could continue to gain support right at this level here. As you can see, there's a transition that was happening back here as it was falling. There's a couple levels here that it honored and maintained. Couldn't go above, couldn't stay above. It perhaps could catch more support around 120, 121, but for right now, it's going to be channeling, or it'll crack and fall pretty badly. Could very well have some big candles from Netflix once again starting tomorrow. What else are we going to look at here? Apple, once again, talked yesterday. Apple, new highs confirmed by the movement right here back above. To go back into the gap and begin to close the gap that was generated by earnings. Very strong movement here, stayed above, took 3 days, but then it kicked off. And that Apple, who knows how high Apple could go. These are new highs for Apple, and it's just been a star. And so you just don't know how high this could go. You see that it went up the rest of the entire day, giving some of it back along the market. Apple just went up the whole day. So does this continue tomorrow? Does this go really big, really fast? Depends on the open. All depends on the open. Depends on the open and the market action as to whether that's favorable. But you can see it's strong as all get out. Could have one more day of this. This is going exponential. This is a very fast rise, but there's nothing above it. So every day, day to day, is a different circumstance based on the open. If the open is favorable with another gap up, yeah, sure, it could go far and fast very quickly. How long does that sustain, and then does it go sideways or drop immediately? That's the question. Apple still could have some good upside, but might have some serious downside if it has a bad enough gap to the downside. Well, UTX. Finish up talking about UTA. UTX was a heck of a stock today. We talked about how it had been maintaining itself above 80. New highs, new 6-month highs, almost 6-month highs, clearly above this level here, significant. It had been maintaining itself, but it was coming down. It was giving it back slowly and reluctantly, and it had a second opportunity today to fall below 80 like it did yesterday. That opportunity yesterday was rejected, and it was again also today, and it was rejected in a very interesting way. Could definitely have read a lot from thinking about it. Understanding 80 was the critical level for this. What you have here earlier in the day was the market's fall precipitated a radical movement down, which was just as radically recovered by UTX. Recovered back above the critical level of 80. So what you see here is very quick movement down, saying, you know, absolutely not. This is not where I need to be. I'm all the way back up here. Starts to retreat, but then it starts to go back above 80. So here's your critical area here where you start to look at this and say, okay, UTX saying I just really don't want to be down there. One of the other things to remember is extreme movements often lead into extreme reactions. Here's an extreme movement that got an extreme reaction. Very dramatic movement on UTX. One of the things to remember about these stocks is that when you see a stock do something very dramatic, it often is going to have the potential to do things that are also just as dramatic the other direction, or whatever that might be. If it's being dramatic and moving fast, it may very well still have the potential to move fast and far. So just like yesterday, this movement down very early on UTX, you can see, guess what? When it recovered itself, it recovered in a pretty dramatic fashion. That's a very big movement. Very nice. And guess what? Today, big dramatic movement down, given back just as quickly. Okay, now it's cradling. Now it's breaking the downtrend line to the upside and beginning to cradle on the MAs. Clearly, you have an important level here where once it's broken this and has reversed this downtrend line, especially with the momentum being upside, guess what? Here's a continuation of that recovery. We're now hitting this uptrend line from the top and maintaining. This is the critical area here. It hits it again, basically. This 80-20 level, we know 80 or 80 flat down here is good overall for stock. Now you've got a horizontal level that it's starting to break out to the upside on reversal of a dramatic movement downward and a dramatic rejection of that movement. Here we go. And it just goes and goes and goes for an hour and a half and maintains and goes higher throughout the rest of the day. Very dramatic response to a dramatic period of time over here that ultimately resulted in maintaining the strength that it had shown in the daily pattern. So this highlights one of the best plays you can find is a cradle reversal in the direction of a strong daily trend, and that's what this was. This was a rejection of this opportunity to fail, a fail to fail, recovers it, cradle reverses into the direction of the strong daily trend, which was up. Beautiful, absolutely beautiful, can be extremely strong. It's one of your best plays is to look for something like this. And anyway, that's UTX. That's how you play it. Very, very key moment right there. And pretty clear behavior. Very nice. Qualcomm is very interesting. And then I think we're done. Qualcomm maintaining itself and still looking to drift higher above 61. So along with the market, Qualcomm is doing very well and is maintaining the gap with the market, as we see here. This is a good pattern, a good strong pattern on today, 61. It could very well just blast higher if the market's going to blast higher. How strong this is. Qualcomm at 10-year highs along with the market. So how far could this go? It could, sky's the limit at the moment. So perhaps some more good upside for Qualcomm. And I think that will wrap it up. We'll talk about CAT real quick. Once again, staying between VT level 12 and 114, continuing to add pressure against this 114 level. Had a higher high today than yesterday and closed above 114. So I see those as both very significant. If we're going to look at CAT on the hourly chart, you see it's pretty flat throughout the afternoon, but the very end of the day, its instinct was go up. I want to go up. Here we go. So we'll take a look at that tomorrow early. Above 114, if it gaps up, it's above any of these levels, is catching wind, catching support, and is starting to go back up again. It could blast above 115 very early and very quickly tomorrow. And I'm still not done. Keep saying I'm done. We'll talk about V, and this will be the last one. Visa, the extended hour charting. It released earnings, had a really big pop back here on the daily pattern from 104 and up. This was because of MasterCard's earnings. Visa and MasterCard being very similar, being essentially the same product. The question was, with this strength generated by MasterCard's earnings, what was Visa going to do when it released its own earnings? It released earnings today after the close. Well, here's your answer. A lot of volatility, moved back and forth, but it has settled out substantially higher than the close today. Close at 108 today. New highs on Visa, new all-time highs. You can see what it was doing here. 10-year highs for Visa, not 10 years, but you see what I'm saying. The earnings come, and aftermarket, it is substantially higher. So that's going to be the case tomorrow in the pre-market. I'll take a look, but if that gap is too big to be sustained, and depending on the opening for the composite and for the Dow, maybe that's going to be a give back very early. Gap up, can't sustain it, gives it back, tries to close the gap. But it is, again, in the direction of new historical highs. So people could take that and just run with it. It could gap up, just fly tomorrow. It really could gap above this uptrend line that you see here. It could gap up somewhere in this region and just blast. So need to look for that. Could be similar to Apple with new highs for Apple. We saw what Apple's done with its new highs. Did have a the very first, but maintained it and went. Is it going to do something similar? Is a gap up and just move? Have to see. Depends on the market, what the market will support. If the market is crushed tomorrow, it could take everything with it, and all bets could be off for any of this analysis. You have to really pay attention to that. The market is to be toppy. Well, not toppy, it's going, but certain things toppy, and at any time we can crack this line and be coming down. Anyway, that's the end of this analysis. Good luck trading tomorrow.